key major step for us is that we want to build a community, and we have decided to do that on Discord. And what's really important to us is that all members of the community have access. We're going to have a whole range of topics that we're going to cover in different channels. We're going to cover current affairs. We're going to cover macro. And so, our expertise is in macro. And we think there's value in delivering in really simple terms the big picture around what the big influences are shaping the months and perhaps next year ahead in markets. We also want to deliver specific signals that are generated by our kind of big artificial intelligence that we've built in the cloud that's gathering all this data and pumping out these actionable ideas across everything from single stocks to indices to foreign exchange to bonds, ETFs, crude oil, gold, over 8,000 instruments. And we also want to have an educational channel where we can talk about things like Twitter is buzzing about the fact that the yield curve is inverted. For many people, they have no idea what the hell that means. And so we think there's an opportunity for someone to come along like EyeQ and start to explain all these things in very simple terms. And we're also going to have another channel that's much more about our company journey and our personal journeys in technology, becoming entrepreneurs, the challenges we faced, the coding, building the team, finding partnerships. And it's been a real adventure, and we think it'll be interesting to share some of those insights and stories with others who are interested in kind of going down that same path. Now, the sorts of people who will be contributing to this community include not only the EyeQ team, which is composed of people who have been very successful portfolio managers for 20, 25 years at blue chip asset managers and hedge funds across everything from macro and foreign exchange to bottom-up fundamental equity analysts. But we hope to be able to attract a broad spectrum of expertise, which will also include seasoned market professionals, all the way down to people who perhaps don't even have a trading account, but just want to dip their toe into what's going on in the world of financial markets. We spent most of our lives in the institutional world at asset management firms and hedge funds. We built this analytical framework to help understand what's going on in markets and leveraging machine learning and artificial intelligence for the institutional world. But then we sort of stepped back and really started to take note of how the interest in financial markets, particularly amongst the younger generations, the Gen Z, millennials, how that in the last few years has really started to explode. And anecdotally, so many of us speak to younger people, even teenagers who are interested in markets and technology. And it occurred to us that aside from buying your house, the most important financial decision you're going to make is how you invest for the future. Now, we know that outcomes will vary. In markets and investing, as in life, outcomes will vary. That's how it is. Where it grates a bit is that if outcomes are varying because some people have access and other people don't have access, that sort of galvanized us all, and it sort of gave the whole EyeQ venture a purpose that every single person in the company thought that would be a great thing to do, and that's why we're doing it. The world has become very data rich. So we've seen over the last 10 years the amount of data explode. So about 10 years ago, as a professional institutional investor, I became pretty convinced that my brain could just not make sense of that complexity any longer. Now, in the 90s, I was sort of doing fine. In the 2000s, I was doing fine, but it suddenly seemed to get much, much harder. Now, the way to think about the problem we're solving is that if you have some asset price moving around, there are dozens of things that influence that asset. So let's take the S&P 500, everyone's favorite index. That clearly in the last 9 months has been blown around by what the Fed says about what they're going to do with interest rates. It reacts to inflation prints. If there's a story about China, in fact, there was one a few weeks ago, about them dropping their zero COVID policy. Oh, the S&P 500 suddenly went up 0.5% on that news. And so what we're trying to do is untangle this web of influences and actually use use data science and machine learning to really define exactly what is driving the price of the asset. And the problem is that, if you look at your market monitor, you've got hundreds, possibly thousands of little numbers blinking in front of you. They all mean different things. And for the human brain to parallel process all of that information and figure out how it's all connected, we thought, well, forget that. Why don't we build a machine? Processing power is now just incredibly cheap. The number of techniques you can apply, because processing power is so cheap, have proliferated. And so we started working with some of the great minds in machine learning and statistics and mathematics. We combined our understanding of markets and we created something that does a few specific jobs. First job it does is it tells us which particular macroeconomic influence, inflation or the Fed or China, is really explaining the movement of the asset. So that's the first thing, clarity. What's really going on? And the way I sort of think about it is that the future is really very hard to predict. And the way to really think about it is, if you don't understand the present, what chance do you really have of predicting the future? The second thing that comes out of this is that if you've identified what's really driving the price, it might be 2 or 3 things that are really driving the price. And if you know where all those things are right now, then you sort of have a price that's consistent with the information. Now, on a trading floor, the way they refer to this is everything priced in? Is all the information we have accurately reflected in the price? So this machine highlights when there's a dislocation between the price and the information. And that dislocation has some predictive power and utility.